Fibonacci ratios are the number one tool to determine where price could be heading and can therefore be used as entry or exit points. In this video, we go through the basics of how to calculate fib numbers, how to draw them on the charts, and 3 secret levels that no one else on YouTube seems to talk about. Remember to like and subscribe, and let's get started. Firstly, let's briefly talk about the basics. The Fibonacci sequence is a series of numbers where every number is the sum of the 2 preceding numbers, as shown. When you divide a number in the sequence by the smaller number before it, the answer is something close to 5, which is why 61.8% is considered to be the golden ratio. This Fibonacci sequence is usually represented by the spiral arrangement shown here, and can be seen in abundance throughout nature, from galaxies and hurricanes to shells and even your ear. And funnily enough, we can even use it in trading, although at PlayFX we only use 3 secret ratios, but they've turned out to be much more accurate on the charts than some of the more common ratios. Let's head to the charts where I can show you how powerful the fibs actually are when used correctly. Let's start with drawing a fib using this symbol on TradingView. So when you draw a fib, you always want to draw forward. And then you can use the settings cog here to change all of the ratios as I have. Next, scroll down and change all of these settings also. Feel free to come back to the video and copy these on your charts, as there's a timestamp in the description. Next, we want to create a template with just the 38.2% and the 50%, a second template with the 71 to 78.6%, and the third template for the fib extension, which is 127.2%, which is taken straight from this book, which I highly recommend reading. And unlike the name suggests, this is actually quite a good read for even advanced traders. So now that we have the fib template set up, we use either the 38.2 to 50% or the 71 to 78.6% as a fib retracement to determine where price might reverse, depending on whether previous price action was an impulsive move or not. And then we use 127.2% as the target in line with market structure. Let's see what I mean by this. So on the left hand side, I've drawn an uptrend. So we get our fib retracement tool, and as price reverses and starts to retrace, we want to find out where price is likely to reverse. So I have my fib target template set up to 71 to 78.6%, and as we see, price has reversed and is making its way up. So now we want to see where price might be headed. So we get our retracement tool again, draw from the high to the low, and change the template to the fib extension, and it will give you an indication of where price will be headed. Similarly, in a downtrend, when price has reversed and starts to retrace, we want to use the fib retracement tool to give us an indication of where price might reverse. So you draw from the swing high to the swing low, and as we see, price has reversed, and just like before, you draw the fib retracement again, change it to the extension level, and it will give you an indication of where price will be headed. Just to clarify, these fib levels work on every single time frame and can therefore also be used on single candles to time a sniper entry. Let's look at these in more detail on the candlestick charts. So if we start from the left hand side, we can see that this is in an uptrend. So we want to see where price will be headed from here. So we draw from the swing high to the swing low, and we can see price did reach the 127.2%. Next we see price has started to retrace. So we use the fib retracement tool to find out where price might reverse. And as it's an impulsive move, we can use the fib retracement, 38.2 to 50%, and we can see it falls exactly in that area. Now, where is price going to be headed next? Draw from the swing high to the swing low, change it to the extension, and it has reached the 127.2%. Then we start breaking market structure and we fall into a downtrend. So once price starts to retrace, we want to figure out where it might reverse. We get our tool, use the impulsive tracement, and it reverses exactly in the 38.2 to 50%. Next, you draw from the swing low to the swing high, change it to the extension level to see where price is headed, and it does in fact reach the 127.2%. Then we go back into an uptrend. Use the impulsive retracement tool, and again it falls exactly in the 38.2 to 50%. Go from the swing high to the swing low, change it to the extension, and we see price did actually reach 127.2%. Now we enter another downtrend. So when price starts to reverse, we get our impulsive retracement, and it has reached exactly in the 38.2 to 50%. Now we want to see where price is headed, so swing low to swing high, fib extension, and it goes exactly to the 127.2%. However, sometimes, as I mentioned before, in fact more often than not, it will reach the 71 to 78.6 level, as it does here. Where is price headed? Fib extension, spot on. Again, as we see price is retracing, we want to see where price might reverse. Get your fib target, and it reverses exactly where our target is. And you've probably guessed it will reach our 127.2%. Right there. So you can see how powerful the fibs are, as price literally reverses almost at every single fib level that we have set. But this is just on the daily time frame, so now, like I said earlier, this works on every time frame. Let's head over to a 4-hour chart. So now we're on a 4-hour chart. Let's start drawing a few of these fibs. We'll start from the left hand side over here. swing low to the swing high. And as we can see, price touches right here in the 71 to 78.6 level. Now we can see where price is heading, drawing from the swing high to the swing low. Change to the extension, and sure enough, it goes straight to the extension level. We're still in an uptrend, so draw from the swing low to the swing high, get your fib target, and as you can see, price does reverse around the 71 to 78.6 area. So now you draw from the swing high to the swing low, change to the fib extension, and as you can see, it's not reached the fib extension, but you should have made a good amount of pips and hopefully moved your stop loss up to break even, so you wouldn't have lost anything. Price starts to reverse, so let's see where it's headed. From the swing low to the swing high. And sure enough, it reverses right around the 71 to the 78.6 area. Does it reach a fib extension? To a T, right there. Then we move into a downtrend. So we draw from the swing high, and as soon as it starts retracing, we want to see where is price likely to reverse. As it's quite an impulsive move down, we can use the impulsive retracement. And sure enough, it falls straight into the 38.2% level. To find out where price might be headed, we draw from the swing low to the swing high, change it to the extension, and right there is where price reaches. Now, always remember, you can't just rely on the fibs alone, even though you can see how powerful they are, as you'd want to enter with more confirmations. We'd want to look for either candle reversals or support and resistance. There's many other confirmations, but you can watch some of my other videos to get a better insight. Thanks for watching, and let me know in the comments if you have any other fib ratios of your own that you prefer to use. See you on the next episode.